With inflation completely out of control and the economy teetering on the edge, you might ask yourself, where does this end? You came here for the truth, so let me unveil that for you. In today's video, I'm going to show you what's going on inside the financial system and connect that in with the economy. Once you know this information, you'll be able to gain insight that most people just don't have right now here in 2024. I'm going to explain it really simple. Let's begin with this. The IMF, everyone's favorite institution, well, they do produce some good reports and they do point out some really good things. So I do like to quote them, but we got to understand their agenda, obviously. The exceptional recent performance of the United States is certainly impressive and a major driver of global growth. But it reflects strong demand factors as well, including a fiscal stance that is out of line with long-term fiscal sustainability. Something will have to give. What are they talking about here? Well, they're not going to be able to rein in inflation if you're spending money like there's no tomorrow. Do they know something we don't? You see, the United States is spending more money than they ever have before. Canada's doing the same thing. Other countries, likely in the same circumstance. You see, they are spending money because they want to give more services, because they want to pump money across the world, because they want to do several things. And in order to do that, they have to pay a bill. And they will do so, of course, with taxpayer dollars, with inflated dollars. They need to package up that debt and sell it off to investors as bonds. Can they get enough buyers? You see, there's a problem here because the debt is racking up. That debt has an interest rate associated to it, and that looks like we're not going to go to zero anytime soon. So we have a big bill to pay. Canada, US, and other countries. This is disastrous. This will present itself to be an issue that you're not going to find. I'm going to show you some charts. I'm going to show you what the fund manager survey out of Bank of America, literally hundreds of billions of dollars under management, what they are saying. And they're not concerned about the right things. You don't have to be concerned about certain things, but there are some things that we got to point out. Look at the largest companies, these US tech stocks, the Magnificent Seven. They have record piles of cash, $300 billion. These are the tech stocks, okay? They could be investing in new development. They could be going through and putting money into new technologies. Imagine what a company like Apple can do if they were to take $100 billion of their cash and put that somewhere to do some wild new thing, to advance some new technology, AI or robots or whatever it is. But they're not doing that. They're keeping it in cash or cash equivalents. So they would rather make, maybe it's 4%, let's just say, on that cash, guaranteed 4% investment. And they can do that instead of actually being able to, for themselves, in this circumstance, they see the benefit of that. Now, there could be different reasons, stuff beyond what we can see, that's obviously on the we're on the outside here, but it's odd, very odd. And that to me rings a bell. We've seen these different circumstances before. And of course, it is something that is, to me, worth noting. Now, this is the fund manager survey. I'll show you a couple charts from this. Interesting. Like I said, hundreds of billions of dollars under management, and this is what they are surveyed. You could see this, 78% of fund manager survey investors say the recession is unlikely in the next 12 months. But you ask them that, November 22, they were all saying that, actually it's looking pretty likely. So you could see how that has changed. In April 20, they also were down at that level. Who knows, right? It's based on interest rates, based on various factors. Are we going to get that soft landing as we've been promised, or no landing? Expectations for no landing is at this time surging. No landing, that's the dark blue color, 36%. And every month that's been going higher and higher and higher. It was at 6% then 7, then 19, and so on. Now 36%. They don't believe we're going to get a landing at all. Just more and more and more growth. What do you think? Which one of these scenarios is the most likely? Of course, we don't know, but when we're talking about admitted, of course, we know what's going on, but is it a no landing? Is it a soft landing? Or is it a hard landing? I know it might be hard for you, but let's just work with the admissions. Are they going to admit it? We'll see. I want to know in the comments. Let me know down below. Let's see. Let's compare each other's responses. Global profit expectations jump to the highest since August of 2021. So you could see that dark blue line. That is the net percentage saying that global profits will improve. A lot of them now are starting to say that that is the case. And why? Because you look around the world, you see more growth. You see the suggestion that, maybe interest rates, they're not going to get cut as early as they were, but yeah, they're still going to be cut. And financial conditions are still, in fact, easier now than they were when they started cutting interest rates. So we got to take that into account as well. So there's an issue here, right? Because we're being told by some that, hey, it's a recession, hard landing potential. We can't get out of the scenario. But the fund managers, the people managing all that money, they don't seem to be concerned, do they? What is the biggest tail risk right now? Inflation and hawkish central banks. That's what it's been for a while now. And so that is the biggest concern. So that is what moves the markets, and that's what businesses are responding to. We're seeing companies, Tesla and other companies, they're laying people off. Okay, we are seeing that overall. A lot of the tech companies in general have been laying people off. But that's what the data shows us. Biggest tail risk is higher inflation. You can see that more now than it was a couple months ago. Much more now, in fact. All right, more than the geopolitics. Who knows, if exactly when that was taken. But the point is, high inflation is what they're looking for. Fund manager survey, equity allocation is the highest since January of 2022. So this is showing us that they're putting more money into equities, less money into the bonds, less money into the cash, and so on. This one right here for my Finance Friday crew. Shout outs to Finance Friday Live. You could see here, fund manager survey investors say that gold is the most overvalued since August 2020. Now, what have I said? Finance Friday crew, you heard me talk about this in the last session. There is nothing that a person inside the financial industry hates more than gold. They hate it. They absolutely hate it. They will do everything they can to make sure you don't get it. Even the paper gold. I'm telling you right now. So take it with a grain of salt. But you can see net percentage saying gold is overvalued. All right. They don't want to see it moving around. They want it to be underperforming everything else. So that's what the big money is saying. That's all I'm trying to tell you. Okay. Credit card days past due trend, and you'll see that they are all picking up. The numbers are still relatively small, but I want you to know that during this time, people are experiencing hardship, and we are seeing that in the form of people not paying their bills, basically. All right. And credit cards is one of those places. So we know there's something going on in the economy. It doesn't matter what the fund manager surveys are saying, but there's something fundamentally going wrong right now today. Are they going to admit that recession? Well, according to the fund manager survey, there's going to be no hard landing. There's going to be no landing at all. But when we look at the numbers of certain things, we can see something weird is going on. Why is Apple just hoarding onto, the last I checked, it was something like $150 billion. $150 billion of cash, but you're not going to invest it. You're not going to expand your operations. You're not going to hire more people. Weird, right? Kind of weird. Commercial real estate, this is just talking about the exposure. It's a UBS report. If you're interested, you could check it out. I think that we have a problem right now with commercial real estate more than anything else. So that is really my number one target of where I'm keeping an eye on. I'm doing another video directly after this about real estate. A lot of that will be about commercial real estate. So tomorrow you'll get that video, and I'm going to just go into all of the details of why that is the biggest concern. But ultimately, what we're seeing is that a lot of the debt associated with this commercial real estate can't be paid back. And so you have a lot of write-offs. When that happens, these banks, they take the brunt of that. That's commercial real estate, not the residential real estate. Although you kind of get a little bit of gray area there when we're talking about multifamily residences. But understand, I'm talking more about retail. I'm talking more about office. There's a lot right now that's going on, and they just keep piling up. A lot of that keeps piling up. This is the biggest problem. That's where I think that we have the weakest link. So I'm keeping my focus there. The residential is not as bad. So just keep that in mind. If you want to join the Finance Friday and get over 2 hours every single Friday of the latest and greatest information, we go in on Zoom and we just get into all this. We do question and answer at the end of it all. I have a whole presentation prepared. We look at the charts. That's 2 hours. If you can't make it live on the Friday session, then you get access to the recordings. I would prefer it that you be there live. That's when we get the most value. That's when I can talk to you directly. But if not, then you can always get the recordings. That's another way. Link in the description at the top. Did you appreciate this video? If you did, hit that thumbs up button, and I'll see you tomorrow. Take care.